Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So please make sure to like, subscribe and hit that bell notification button so you don't miss the latest cryptocurrency news. Let's see what's going on with the price of Bitcoin right now. It looks like we're trading at $42,264, down slightly within the last 24 hours, but up nicely over the weekend nevertheless. And we've got Ethereum down slightly in the last 24 hours as well to 2,263. So we are going to be taking a look at the price of Bitcoin today, at the price of Ethereum today, comparing the two and seeing what's in store this week in cryptocurrency, because it's a really interesting point right now. I still believe we are sat on the fence. I'm not totally convinced that this pullback is over. So we are going to talk about that. Let's pull this up today. Please don't forget to like, subscribe, hit the bell notification button. Hello to everybody in the chat. Thank you very much for tuning in once again. We're on 3 likes today. Please, let's try and get a goal here. Let's set a 30 like goal for today's stream. Please make sure to like if you haven't already and help us with that goal. Let's see what's going on with the price of Bitcoin here. So on the daily chart, we've got all the same lines that we had on Friday. We're not changing this around. So what you can see is we have some significant levels of support and resistance, which are all now below the price of Bitcoin. So acting as a point of support with these green lines here. So we're looking at that $41,300, $37,900 and $35,500 levels. So they are all significant levels of support in my eyes when it comes to the daily chart. Now, if you take a look here, you can see we have a box here, and this is a zone that we have been using as a level of support numerous times since we broke to the upside back on the 4th of December. If you take a look here, you can see that between the $42,000 level and the $40,780 level, you can see that has been used as a level of support numerous times. So what we can see here is this going to continue to be acting as a level of support? Well, we are back above that now. On the daily chart, we have had a red candle above it. Maybe we are using this now as a confirmation bounce. Maybe we are seeing something like this happening right now. If we go in on the 4-hour chart, you can see that we are using this zone as a support right now. So this to me is very, very bullish. Very exciting to see us using that zone as a level of support. But are we in the clear? Are we through that bearish period? Is that pullback over? Was it just off the back of FTX dumping their GBTC, or is there more to come? Well, if we take a look, if we zoom right out onto the weekly chart, you can see that we have Bitcoin halvings every 4 years, every 210,000 blocks. Let's pull this up. Bitcoin halving. Let's type it correctly. That'd help. Bitcoin halving events. Here we go. Zoom out right now so you can see, well, you can't see much on this chart, but you can see the previous cycle on this chart that we previously, prior to a bull market, do see some sort of downtrend. Now, I'm discluding this because we all knew what happened in 2020. It was a black swan event. We shouldn't ignore that. If we go onto the BTC, let's just go back onto a bigger time frame. This is going to be better. If we go to BTC USD and we go to Bitstamp, we can see much further back on the chart, and we go back to the weekly and we go to Bitcoin halving. Again, I'm going to spell that wrong. There we go. Bitcoin halving. You can see that prior to every Bitcoin halving, we have seen some sort of pullback. And actually during a Bitcoin halving month, it is typical to see a little bit of pullback then. So I'm looking at what's happening in the markets right now and I'm saying we are currently at a point where we are only, if we zoom out here, zoom in here even, if we zoom to around here, we are only from here to here, well, only I say 60% away from that all-time high for Bitcoin. Now, this is pretty high. If we're looking at the $42,000 levels where we are currently, we've hit that $49,000 level and Bitcoin's high was at $69,000. That's pretty high, seeing as though we haven't had the Bitcoin halving yet. Now, typically before a Bitcoin halving, we are miles below the all-time high. If we take a look at this, let's pull in the Bitcoin halving here. So the Bitcoin halving, the next one is going to be in April 2024. Now, if we take a look at what happened last time, prior to the Bitcoin halving, Bitcoin was, do you know what, 40%. Take that back. Do you know, this is pretty interesting here. But if you take a look here, you can see that we have had a pullback here prior to the Bitcoin halving, prior to that Black Swan event. And what we could see is something similar here, where we have some sort of pullback throughout this period. During the Bitcoin halving, have some pullback, and then we really see Bitcoin rally. If we were to look at what happens in previous cycles, this would make sense right now. So I'm looking at the price of Bitcoin. We're seeing a lot of volatility in the market still. We're seeing a lot of excitement coming off the back of these ETFs and the possibility of an Ethereum ETF in May. But what we could be in for now is the what's classed as a killer to me, the sideways action. The most painful price action for Bitcoin there is sideways action. And I think this is what could be in store for the next couple of weeks. Now, if we take a look back at the daily chart and we zoom back in again, you can see we are currently bouncing this previous zone of support, and it may be getting used as a support again. It would be brilliant if we were to come up and retest that $44,000 level, see if that's still acting as a level of resistance. But I think we could be in a price range now where we are trapped for a period of time. And for me, I think for the next couple of weeks, we could be looking at between that $38,000 level and that $44,000 level. Now, why is this $44,000 level significant other than it being a major level of resistance? Let's once again pull up the heat map for the liquidations. Here we go. So this should be the correct chart, but you all know that I pull up the wrong chart about 5 times before I pull up the correct one. This is it. Before we take a look at this, please don't forget to like, subscribe, and hit the bell notification button. What we're seeing here is where would Bitcoin traders feel the most pain. When this chart is yellow, that shows that that is a key level, and if the price of Bitcoin hits that point, a load of traders will be liquidated. Right now, on the smaller time frames, we are looking at around $42,640 to liquidate loads of shorters, and we're looking at $41,390 to liquidate all those longers. Now, if we take a look at the 3-month chart, we can take a look at the bigger picture, because I think if you zoom out more, you can get a better indication of what's going on here. In fact, let's go to 6 months. I think this might be clearer again. So we've been up here for a long time now. If you take a look here, there's a significant amount of liquidations that would occur if we go to $34,000. It looks like that level isn't as significant as it was when we were looking towards the end of last week. Maybe because we've zoomed out that bit further, but it's now gone back past the back of this chart. What we're seeing here, though, is there is a huge amount of liquidations up at below us right now. But if we take a look at the 3-month here, there's not many liquidations above us, so that's not too attractive for Bitcoin, because Bitcoin takes the path of most pain. That's making me feel a little bit cautious. So overall, let's recap what I've just said, because I feel like I've gone the long way about it. On the 4-hour chart, we've reclaimed the level of support, which has previously been very, very strong. So this is a bullish signal. In terms of the Bitcoin liquidation heat map, you can see there's a load of traders that could be liquidated if we move to the downside. So that would be more attractive for Bitcoin. If we take a look at the 4-year cycles, you can see that Bitcoin historically doesn't have a good run up to the Bitcoin halving. So that indicates that we could be in for some sideways action or some downwards momentum. And now I want to highlight to you why some people are feeling super bearish at this price point. So if we pull up the trend line here and we take a look at what's been happening on the daily chart within the last couple of months, you can see there is a significant level here that has been used as a level of support and resistance numerous times. Now, this has been used as a level of resistance back in June 2023, again in November 2023, and then as a level of support in more recent weeks, before we have now broken down below it, and we have actually used this as a level of resistance once. So I'm looking at what's happening now as a potential retest, and this is really important. If we continue up to that $44,000 level, I will start to feel a lot more confident with what's going on in cryptocurrency. But if we get another rejection at this point in time and we end up reusing this zone as a level of resistance, that's when we really need to be starting to look lower. So I really want to be prepared for that. I want to be cautious right now, because we could be in for some sideways action, and in sideways action, you just need to take it slow. We could be in for some downwards momentum, and in that case, you want to take it slow. You don't want to accumulate too much at these levels. But the other possibility is we just continue to soar and rip up through these levels of resistance. I personally think this is the least likely scenario right now, but Bitcoin doesn't like to do what the herd are doing, and a lot of people are shouting bearish claims right now, so that's making me feel really cautious about being bearish. I don't like to follow the crowd. If everyone's feeling bearish, I'm scared to feel bearish. There's something in me telling me that too many people are bearish right now. So I'm trying to be cautious here, but the charts are all pointing in one direction. Jason says, what is your call for the low before the boom over the next few weeks? Well, in my opinion, what we're seeing here is obviously we have now, we're even closer, 3 months away, and we're 3 months from the Bitcoin halving, and this is typically a period where we don't see too much bullish momentum, a period where I personally believe, and I've been saying since the start, if you go back to our streams, in fact, a year ago, you will hear me say that I'm expecting Bitcoin to have hit $50,000 by the time we hit April 2024 when that bull market arrives. So that was a pretty close estimation, considering as though we've hit $49,000. And this was a call I was making down at $20,000. So I'm pretty impressed with that. That's something I've just remembered. $50,000 prior to that Bitcoin halving was my estimation price. And that's not really changed for me. I don't expect us to go higher than $50,000 prior to that April Bitcoin halving. I think that is the limit prior to a halving. Obviously, anything is possible. The trend may be different this time. We could break through it, but I think $50,000 is my limit here. So in terms of ceiling price for the next 3 months, I am sort of looking at this level. Obviously, nothing's financial advice, nothing's certain. This is just kind of projecting previous cycles onto this cycle and seeing what's possible here. I think we are looking at some sort of price action. I'm saying between that $44,000 level and that $38,000 level for the next couple of weeks. I can see us coming down in prior to the halving and actually retesting that $34,000 level. So I'm really looking at anywhere between 49,000 and 34,000 for the next couple of months. I know that's a super large zone, but over time we'll be able to get better understanding of the way Bitcoin is going to go. We can't just say, yep, it's going to go down and hit this exact level right now. Although I did that perfect $50,000 Bitcoin claim, what you can see is like as the supports get either stronger or broken, we'll be able to make closer estimations of what's going to happen in the coming days. I always say to people, like, if you ask me what's going to happen 4 years from now, I can make a pretty educated guess. If you ask me what's happening tomorrow, I can make a pretty accurate guess. But if you're going to ask me what happens in a month's time, that's not my forte. That's not my go-to, because I don't know what supports and resistances are going to hold on the daily chart in the next couple of weeks. The midterm is the hardest to estimate. The short term, yeah, because you can see what's on the charts right now. The long term, yeah, because you can see those 4-year cycles. But the midterm, it's pretty hard to distinguish what's going to happen in the midterm there. That's why I always play the long game unless I'm trading, and then that's the short term. So I don't try and mess with that middle ground. But in terms of what could happen prior to this Bitcoin halving, I think $50,000 was a pretty nice guess, and I'm going to stick with that, stick with my initial thoughts as the highest that we'll really reach prior to that Bitcoin halving. And in terms of the lowest, I think $34,000 is the lowest we would see. Typically in a bull market, we see a 20 to 30% pullback. $34,000 is a magnet for Bitcoin right now because a huge amount of people will get liquidated, and it is at that 30% pullback point. So it would fit in perfectly with the trend. I think that zone is something I'm pretty comfortable that we will be staying into. Obviously, anything is possible right now, but that is, I know it's a pretty big zone, so I'm playing it pretty safe by giving this estimation, but that is the zone that I'm expecting us to stay in at this point in time. I'm not expecting a huge crash, but we could see another Black Swan event. Who knows? We have to be prepared for anything in this market. It's all a little bit crazy. Justin P says we're going to soar. Jason Smith says interesting thoughts. Thanks for that. Hello. Thank you very much for tuning in. As always, hello to everybody in the chat today. Jason Smith says, got to tough it out. It's sideways action isn't always the funnest. A lot of people lose interest in the cryptocurrency space, but it's part of the fun. It's a time where you can educate yourself without feeling like you've got loads of FOMO in the markets. When the bull market hits, we all wish that we could have a breather. We could have a week where we just pause the markets and catch up with everything that's going on. So this is the opportunity to do it if we are going to get this sideways action here. Let's see what Randy says. Drivers for the price to increase now before the halving is the accumulation from the ETFs. Yeah, exactly. Huge potential here when it comes to these ETFs as well. That does impact this cycle. I hate to say this time will be different. I've seen so many times in the markets, people say this cycle is different. We're going to see a super cycle. We're going to see us absolutely moon. I do think Bitcoin could have a really nice run in 2024 thanks to these Bitcoin halvings, but I like to follow the trends. There's 4-year cycles here and we've kept to those 4-year cycles, so I'm not predicting anything different. I'm looking at how previous cycles have gone and projecting onto what's happening now. So yes, we have had a bigger run up than we would typically expect prior to a Bitcoin halving, but the cycle it's not significantly different here at this point in time. So I'm still looking and projecting previous cycles. What we can see is I always as well go off time periods, not prices as well, and I think that has an advantage in this market, because if you take a look at what happens for Bitcoin from the bottom of the bear market to the top of the bull market, the percentage change each cycle has reduced every cycle, because obviously Bitcoin is getting bigger, so it takes even more money to create those percentage gains. But at this point in time, I don't necessarily think that that's going to be the same here. I think we could see a huge percentage gain in this cycle. I think the timeframes we're looking at should, in my opinion, be following the trends. So typically a bull market lasts 18 months after that Bitcoin halving. So I'm looking at around September 2025 for where we could really see a dip in the price and start to see a bear market begin if the 4-year trends continue to repeat themselves. But this is an analysis that you need. You can't just say, yes, this is going to happen, and then just let it all happen without even looking at it. This is something that can constantly change. If we see a massive bear market for the next year, obviously I'm not going to still be shouting for the top in September 2025. Like, this is something that you need to keep adjusting and working on and understanding and just assessing as time goes on, like I've just said with the midterm chart. But right now, as the trends are starting to repeat themselves and we are still looking like we are in these 4-year cycles, I'm keeping my analysis the way that it has always been. Hopefully these ETFs do have a massive effect. Hopefully they do drive the price up higher than we saw in the previous bull market. But I'm trying to move away from saying that this time's going to be different. The ETFs are a really positive thing for the markets. Institutional investment, retail investment, marketing from massive companies that are issuing these ETFs are a huge opportunity for cryptocurrency and for Bitcoin. And we could see the Bitcoin price skyrocket. But I think at the end of the day, is there another bear market in store? There's no reason to believe that there shouldn't be at this point in time, I think. But that's a long way away yet. We need to enjoy the bull market first. Let's see what's going on here. Morning, James. New week, last of January. Exactly. We've got to make the most of this. January and then February will arrive. Is February historically bullish or bearish for the Bitcoin price? Let's pull this up. Bitcoin monthly gains. Is this on CoinGlass? I think it is that I normally look at. Historical Bitcoin performance. Let's see if we can pull this up. This is the one I was thinking of. Here we go. So Bitcoin quarterly returns, Bitcoin monthly returns. You can see in February, it's typically bullish for Bitcoin here. If you take a look at this column down here, 2023, we saw a 0.03% gain. I wouldn't call that too bullish. I think we need more of a heat map here where the big gains are dark green rather than just all being light green. You can see in 2021, it was super bullish, up 36%. 2022, up 12%. So this is kind of the same point in the markets that we were at back in 2021. So hopefully February is bullish. March is seen to be historically pretty bearish there. April, mixed reviews, as I've said, because Bitcoin halving is expected to be in April. I'm expecting it to be slightly red, but anything is possible here. Let's take a look at, what was I going to take a look at then? There was something I wanted to look at then. Let's take a look at the quarterly returns while I think about this. First quarter of the year, typically not too good. So far, we're down 0.04%. Where did we start this year? Where are we? January 1st, we were currently trading at, here we go. This is the candle for the day. We started trading very close to where we are now. Interesting. Right, okay, so let's go back anyway. So this is what we're looking at. February could be bullish. Fingers crossed it is. Maybe that's more of a reason to feel positive about what's going on right now, but I am being super cautious and being aware of this resistance that we are currently still under. Hopefully we do break up above it, and then we can kind of dismiss it as a line and say it's not significant, and then we can continue to look at this price range that we are currently in. Significantly for me, we are looking at between that $38,000 level and that $44,200 level. So definitely points to be keeping an eye on. Let's see what's going on. James says, with all these new players and liquidity drying up, expect the new bull market to be nothing like the last ones. Potentially, I think there is huge opportunity here. I think these ETFs can change the amount of opportunities here. We could see Bitcoin massively soar, and that's why I don't want to kind of project previous percentage gains for bull markets onto this cycle, because there's a huge opportunity there when there's no barriers to entry. There's opportunities for institutional investors to get exposure to Bitcoin and all the rest of it. We all know the really positive things that come from Bitcoin ETFs. I think there is a huge opportunity here for Bitcoin to rise higher than it has previously. I think we could see a massive liquidity crunch because of the amount of Bitcoin that's being stored away by these institutions, because we're seeing this Bitcoin halving. So I think there is huge opportunity for massive gains here, but I'm trying to keep a cool head on it at this point, still be in line with the 4-year trends, try and keep an eye on what's going on. Maybe the institutions will be buying up the dips bigger than we expect, but I'm not dismissing the fact that we will continue to see 20 to 30% pullbacks within a bull market. We could see the bull market perform really, really well, and I'm not 100% sure that we won't see a bear market ever again. I think looking at the previous cycles is still really important. Despite having this really bullish news, it may push the price of Bitcoin up higher during the bull market, but I think keeping a cool head on the opportunities here is still important, because we are still going to get that volatility. We are still going to see those pullbacks. We obviously all want to be here for the big gains. I think, as always, dollar cost averaging in is the best strategy here, and dollar cost averaging out as well is the best strategy here, and something that I'm going to stand by and continue my plan of action from before these ETFs even were live, and just hopefully make bigger gains. But let's take a look at some of the news for the day, because we've not started the news yet, and we are already 25 minutes into today's stream. Before we get started, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. The first story of the day is CFTC chair calls for comprehensive regulation for digital assets following the ETF approval. So the CFTC is the regulator in the US that regulates commodities. The SEC is the regulator in the US that regulates securities. There's been a little bit of squabbling over the years because there's been a bit of overlap when it comes to these two regulators regulating cryptocurrency, because there's confusion over whether digital assets are securities or commodities. We all know this by now, but what the CFTC chair has been saying here is he's got significant concerns regarding the current state of cryptocurrency and digital asset regulation during a speech in Naples on the 26th of January. Now, we already knew this was clear. I think the CFTC chair is very much trying to see some more clear guidelines when it comes to cryptocurrency regulation in the US. So we can see here that a central theme of Benen's remarks was the absence of cohesive legislative framework for the cash markets of digital assets. He emphasized the risks and uncertainties stemming from lack of regulation, particularly in areas critical to market integrity, such as trade settlement, conflicts of interest, data reporting, cybersecurity, and customer protections. Benen stressed that his regulatory void seems to opaque and inconsistent practices in the cryptocurrency market. The CFTC chair also responded to the SEC's recent approval of applications to list and trade shares of spot Bitcoin ETFs. While recognizing this as a step towards the integration of cryptos into established financial systems, he cautioned against the potential misinterpretation of such approvals as indicative as the comprehensive market regulation. So I think the importance here, I think something that he's trying to stress in this statement is that just because these ETFs have launched doesn't mean the cryptocurrency industry is a safe investment. At the end of the day, regulators are here to try and protect people's funds. They're trying to protect people. They don't want people investing in scams, investing in schemes. They want people to be investing in assets that are safe. When the SEC actually launched the ETF products, they did not say we are endorsing Bitcoin, go and buy Bitcoin. They said there are people that are selling Bitcoin and companies that are selling Bitcoin who are not regulated in the way that they should be. Obviously pointing fingers at Coinbase and Binance here because they said that they are unregistered securities exchanges. So the SEC has said, look, there's loads of ways that aren't safe for you to buy Bitcoin, and we needed to provide something for you here. There was no reason not to provide this here. So here's an ETF as an option if you want exposure to Bitcoin, but we do not endorse the asset at all. So that was kind of the thinking behind the SEC's acceptance of the ETF, or like the cover they put on their acceptance of the ETF. I think at the end of the day, the SEC approved it because they had no other choice. They'd been through a lawsuit, but they've accepted these ETFs nevertheless. And now the CFTC chair is saying, look, we need some more regulation on what's going on behind the scenes. These ETFs have been launched, but there's still some regulatory issues going on in the industry. This is just kind of like it's like the front end for people in traditional finance that want to get into Bitcoin, but there's still the back end that's still the exact same behind here that needs to be regulated in some way. So really, I understand the comments here. And hopefully we do see more clarity when it comes to regulation in the US for cryptocurrency within the coming months. I'm not holding my breath on it at this point in time, but you never know what's to come here. Let's take a look at what else is going on in the space here. So Harvest leads the charge with Hong Kong spot Bitcoin ETF application. So what's happened here is Hong Kong has received its first application for a spot Bitcoin ETF in the region, as you could expect here. I mean, Hong Kong are really pushing for the adoption of Bitcoin. I was actually in Hong Kong a couple of weeks ago now, and there was Bitcoin shops around, cryptocurrency shops around, people accepting cryptocurrency and Bitcoin. I don't think in terms of retail investors and people using cryptocurrency on the day-to-day, it was that big. I've been to other places where it's been bigger, but we have seen in previous news that the regulators in the US and the government in the US, in Hong Kong, have been pushing for the adoption of cryptocurrency. We did actually see them urging the banks to work with cryptocurrency companies towards the end of last year, really trying to make a push and really trying to gain the opportunity here and try and get that first move advantage, because the US are pushing people out, so why not welcome them in? If this is an innovative technology, being the first to acknowledge that it is something that's going to stick around and being the first to welcome those companies into your region, you are going to get first mover advantage. And I think that's what Hong Kong have seen here, and I think that's why they are pushing so heavily. So I have no doubt that they will be happy to see that applications are coming through the door now for spot Bitcoin ETFs, and I expect that these will be accepted pretty soon. Now, although this is super positive, let's take a look at this interesting article. So Vanguard have chosen to delist any Bitcoin related ETFs. I believe they had Bitcoin futures ETFs listed, and they've chosen to remove them. They will not be listing spot Bitcoin ETFs, and they have now said Bitcoin is an immature asset class. So Vanguard rejects Bitcoin ETFs, citing the cryptocurrency's lack of maturity and alignment with its investment philosophy. Interesting stance here, because we've seen a lot of users over on Twitter or X saying, look, I'm not working on Vanguard anymore, I'm moving over, because they're not giving me free rein on what I want to invest into. If I want to invest into Bitcoin, I should be able to invest into this Bitcoin ETF. It's not for them to say whether I should or not. So they've actually lost, from kind of on social media channels, it looks like they are losing clients because of this. But let's take a look at what they've said here. So Vanguard decided not to offer clients access to Bitcoin ETFs because the flagship cryptocurrency is an immature asset class that does not align with its company philosophy, according to the firm's executives. Vanguard Global Head of ETF Capital Markets and Broker and Index Relations, Janelle Jackson, made the statement during a QA session where she clarified the investment firm's stance on Bitcoin and digital assets. So she said, while crypto has been classified as a commodity, it's an immature asset class that has little history, no inherent economic value, no cash flow, and can create havoc within a portfolio. So interesting points here. I would say that it does have economic value, and I understand that it could create havoc within a portfolio if you are just referring to it being volatile. It is a volatile asset, but people want to get exposure to that volatile asset because historically it performs very, very well. Just because you are against Bitcoin doesn't mean every person on your platform should not have access to it, in my opinion. I think that's a pretty fair opinion to have. So we can see here Jackson said that Vanguard would not launch a Bitcoin ETF or any crypto-related products, considering the current state of cryptocurrencies as an asset class. She highlighted that the decision-making process for introducing new investment products at Vanguard is rigorous and prioritizes long-term investment merits and client needs. Despite the growing discourse around Bitcoin and cryptocurrencies, Vanguard does not view them as suitable for inclusion in long-term investment portfolios. Meanwhile, the company's head of brokerage investments emphasized that Vanguard's investment investor base primarily consists of long-term buy and hold investors, and the firm's offerings reflect these client needs. So they have received a lot of backlash from this, as I've just been saying. Vanguard's stance towards Bitcoin ETFs has sparked significant reactions in the investment community. The firm's stance focused on traditional assets has led to frustration amongst some of its clients. Some have said, industry experts have suggested that Vanguard might lose credibility and assets due to its stance on Bitcoin ETFs, as it appears to be a move contrary to the current market trend, where many investors are seeking exposure to digital assets. And this is going to happen more and more and more if a bull market picks up. In a bull market, people that have no interest in cryptocurrency suddenly want exposure to the Bitcoin price, exposure to the cryptocurrency's market prices. And having Bitcoin ETFs removes a barrier to entry that we've had in previous cycles. So this is why I'm super bullish on Bitcoin. But when it comes to Vanguard here, if we're saying, look, if somebody comes over and says, look, I want to invest in cryptocurrency, I want to invest in Bitcoin, I want exposure to this market volatility, if you can remove a barrier to entry and go elsewhere, you would do that, I think, personally, rather than going to find a centralized exchange. A lot of the general public that don't know a lot about cryptocurrency have heard about FTX, and that has made them lose their trust in centralized exchanges. They don't want to do research on centralized exchanges because they don't understand cryptocurrency. I remember when I first got into cryptocurrency and I felt so out of depth. I felt like I was never going to understand what's going on in this market. And that's how people are feeling when they're coming in during a bull market. And they're also feeling the feelings of FOMO and the feeling that the kind of opinion that they might be too late to get in. So they've got all of these emotions, the FOMO, the fear they're too late, and they just want to get in as quick as possible. They don't have the time to research centralized exchanges, to understand the difference between FTX and other exchanges, to learn which to trust, to learn how to use self-custody to move your assets onto a wallet, essentially. So there's all of those barriers to entry when it comes to cryptocurrency, and we've seen that over and over again in a bull market. So having these ETFs is a brilliant opportunity to remove that barrier to entry. But if Vanguard aren't offering these ETFs, people will go elsewhere. It's not the case that if Vanguard don't offer them, people will say, oh, do you know what? Vanguard don't offer them. I'm not interested. Customers will go elsewhere. It's that simple, especially with those emotions that come with a bull market when it comes to retail investors. Now, what else can we see here? Other major players in the asset management space like BlackRock have embraced Bitcoin ETFs, highlighting a divergence in strategies within the industry. Despite Vanguard's resistance to Bitcoin ETFs, some analysts believe the company might eventually soften its stance. The growing popularity of digital assets and presence from competitors could be influential factors in such a potential shift. Let's take a look at the chat quickly. Whole City Group said, Vanguard view on crypto-related assets is more of a personal issue than irrelevant to the public. That's irrelevant to the public. I do agree with that. I think there's some fear when it comes to Bitcoin, and I think they've chosen not to list this. If they turn around and say, do you know what, we need to launch these assets after all in a couple of weeks' time, they've just missed out on opportunities there. As we've been discussing with these ETFs, first mover advantage is super important. If you've got clients moving away from your platform, that's a big mistake to make. That I think they could be. I can't see them turning around after making such a hard stance on this to say, do you know what, we're going to launch them after all. I can't see that. They might do, they might have to. I mean, it's a business at the end of the day, but they've made such a big deal out of this. It would be pretty laughable if they did turn around and launch these products soon, but who knows. Let's see what else is going on in the news here today, though. We've got a couple of news stories here. So Robert Kennedy Jr. aligns with Trump regarding CBDCs. Trump has said if he gets voted in, he will ban the launch of a CBDC in the US. Obviously, there are a lot of controversial opinions when it comes to a CBDC, a central bank digital currency. The idea of letting the government have control over your transactions, put limitations on your money, is a concern for a lot of people. So this is something that is going to pull a lot of people onto their side. Let's take a look at what else is going on here. So Bitcoin ads are now available on Bitcoin starting today. Bitcoin ads can now appear on Google in line with specific terms. So they put a ban on Bitcoin and cryptocurrency ads back in 2018. The ban included ICOs, wallets, and exchanges. It came shortly after Facebook had taken the same steps, and they were trying to tackle emerging threats, but they've now decided to remove this ban. However, unbanning Bitcoin-related ads will not allow any cryptocurrency to appear on Google. The policy change is expected to adhere to coin trusts, also known as spot ETFs. So they're saying here, look, BlackRock have launched ETFs. Fidelity have launched ETFs. We can't stop the advertisements here. This is allowed. Ads regarding the latest meme coin to take the limelight or a DeFi project will not be hitting users' screen via ads, but Bitcoin ETF ads can be put on Google now. And I think this is a huge opportunity here. I think this is something that I've discussed a lot on the channel. We'll just go over it very quickly. BlackRock, Fidelity, and a lot of the other institutions, they have a huge amount of power, and they are now pushing for Bitcoin ETFs to be invested into. They want as much money in those funds as possible. So they have going to be creating a market strategy to push their Bitcoin ETFs. They are marketing Bitcoin in a sense, and there's a huge amount of potential there when it comes to the Bitcoin price, when you've got the biggest asset managers in the world saying, look, you should invest in this asset, and creating a market strategy around trying to convince people to invest in this asset. So huge opportunities here, and at least Google allowing this here. Let's see what else is going on in the chat here. We've got 20 viewers on our stream right now on YouTube and 17 likes. Let's try and hit that like goal of 30 likes. Please don't forget to like, subscribe, and hit the bell notification button. Comment down below, chat in the live chat, interact with the stream as much as possible, and it helps the channel grow as much as possible. So it's really great to see. Let's see what else is going on here. So FTX ended 2023 with $4.4 billion in cash. The bankrupt exchange continues to increase its cash holdings by selling assets here. So we do know they've just done a hell of a dump when it comes to GBTC. FTX is responsible for 1/5 of the $5 billion of GBTC outflows since it began trading. So we all know about this by now. They've been selling their assets and trying to fund because they need to repay their users as quick as possible. Let's see what else is going on here. Bitcoin miners may be unprofitable post-halving. So this is a report I think we see every single 4 years. So what essentially is happening is Bitcoin miners mine Bitcoin, so they put all their computational power towards trying to compete and complete a complex cryptographic puzzle to be rewarded with the opportunity to mine a block, to create a block, basically create a list of transactions and put them onto the blockchain and confirm those transactions. If you're a Bitcoin miner and you manage to complete that complex cryptographic puzzle first and you get to put a block onto the blockchain, you currently earn 6.25 Bitcoin. Now this happens every 10 minutes. Every 10 minutes, some miner across the world gets the opportunity to mine a block and earn 6.25 Bitcoin. But after the Bitcoin halving, which is in April this year, let's see what date it is. Let's get the Bitcoin halving countdown down. Bitcoin halving countdown. Let's see when this is. Let's pull this into the chat right now. So 71 days when the Bitcoin halving does come around, what we are going to see is the amount of Bitcoin that Bitcoin miners receive will halve. So currently it's 6.25, but after April this year, it will go down to 3.125 Bitcoin per block. So the inflation rate for Bitcoin is going to halve. This happens every 210,000 blocks. This is going to be at block 840,000, and this is expected to be on, does it have a date here? Let's see if we can get a date here. Bitcoin halving. When is the next Bitcoin halving? Is this updated every day? Here we go. So it's looking like April 2024. We already knew it was April 2024. Do we have a specific day on one of these things? Let's see if we can find it. 83 days, 13 hours. It's expected to be on the 22nd of April right now. So there's only a slight bit of fluctuation because there's a new block every 10 minutes, but there's obviously a couple of seconds either side. Sometimes we do have a significant delay, but as you get closer, obviously the kind of movement for the time estimation does decrease. So we are looking at 22nd of April now. I don't expect that to change too much. So 22nd of April, on the 22nd of April, and I get so distracted on these streams. On the 22nd of April, the Bitcoin halving is going to hit, and Bitcoin miners will receive half the amount of Bitcoin that they would do in March, essentially, or on the 21st of April. So there's a half when it comes to their income. So how do they manage that? Well, they're still using that expensive hardware. They're still putting the same amount of energy into that hardware. And they've got to pay for that energy. They've got to pay for the fans to cool down their hardware that gets extremely hot. They've got to pay for the warehouse or wherever they are storing their mining rigs if they're a big mining company. So they've still got the same outgoings, but their incomings has halved. How do you deal with that? Well, it's a really difficult situation. Let's take a look through this article and it will explain this in a little bit more detail. With the Bitcoin halving drawing closer, the attention is quickly shifting from ETFs to the block reduction. So it just says what we've explained here. Now we've got analyst Fitzgerald, who has reported on the possibility of miners being unable to run operations profitably post-halving. So on Thursday, CleanSpark CEO said, today's brand new report from the research team at Fitzgerald shows that this focus is showing in our results. Below with approval from the firm is the all-in post-halving costs to mine Bitcoin. Now, obviously, what we can see is if the price of Bitcoin holds a certain price or continues to increase, this isn't a concern, because if the price of Bitcoin doubles, they'll make the same as they were in March, essentially. It's the although you're receiving half the amount of Bitcoin, the Bitcoin price changes. So if the price of Bitcoin doubles, it's back down to neutral. So you can see Bitcoin is trading at $40,000, and in this chart, we're looking at the all-in cost per coin immediately post-halving. So it's saying here, if the price of Bitcoin drops below these figures, we are going to see these miners be unprofitable. And there's only 2 miners on this list that are looking like they will be profitable post-halving. So what are the concerns here? What are the problems here? Well, first of all, the price of Bitcoin historically does increase post-bull market. And second of all, this isn't too much of a concern. If you think back to what happened when Bitcoin first launched, you did not have these massive companies with these massive warehouses that were spending thousands and thousands of pounds on each individual mining rig to mine Bitcoin. It was just people at home with their MacBook, turning on the mining and just saying, well, run for me and see what happens. And they were earning I think it started at 50 Bitcoin. It went 50, 25, 12.5, 6.25, 3.125. Yeah, so it started at 50 Bitcoin per block. Every 10 minutes, 50 Bitcoin were added into circulation and rewarded to miners. And over time, obviously that was really, it wasn't super profitable at the time because the price of Bitcoin was lower. But over time, the competition to mine increased. Now, for Bitcoin to have a new block every 10 minutes, the more computational power that is being put to the network, the harder it will make it for people to mine. So when people are mining, they're trying to complete a complex cryptographic puzzle, as I said earlier in today's stream. If there's loads of computers trying to solve that cryptographic puzzle, they'll be able to complete it faster if the difficulty is just consistent. So what Bitcoin is designed to do is the difficulty of that puzzle will increase if there's a huge amount of computational power, so that it still takes 10 minutes to mine a block. And then if the amount of computational power decreases, people are turning off their computers, the difficulty will decrease to align with that and get it so that there's then again 10 minutes per block. So if we do see some difficulties here, if we do see some of these big mining companies shutting down, what would happen is essentially the difficulty would come down, maybe more people would have access and the ability to mine Bitcoin, and we would just see it decentralize even further. There has been some reports in the last couple of months and years over the concerns when it comes to the decentralization of Bitcoin because of the amount of computational power some of these big companies put into their mining rigs and the percentage over the network they have. But if this were to happen, which I don't think it will because we see these reports every 4 years, what we would just see is more decentralization, in my opinion. More people with lower performing devices being able to mine Bitcoin would create some decentralization. But I don't even think that will be the case, to be perfectly honest. Let's see what else is going on in today's stream. My camera's flashing like it's about to die, so let's be quick here. Elwood Technology receives FCA approval for crypto trading. So this allows institutional clients to connect to crypto exchanges and over-the-counter counters. So huge chain improvement there. I mean, the more we can see the FCA approve crypto trading, the better. We've got Polygon witnessed similar success to Ethereum last year for onboarding users. I think this is a really interesting heading to consider here when it comes to platforms that are competing with Ethereum, looking at the trends that Ethereum had in the previous bull market where it really surged that fast. We could look at those trends and try and figure out what other platforms are seeing similar trends. So we're looking at, for example, the amount of users that it has, the volume of transactions that it has, all of these kind of figures that you can see online thanks to them being a blockchain. Are the figures that you can look at and try and take advantage of for the next bull market. Let me pause today's stream and then we'll come back when I've put a new battery in my camera. 1 second. Right, we are back. That's what you get for being on stream for 45 minutes. Let's go back to this point. Before we do, please don't forget to like, subscribe, and hit the bell notification button so you don't miss the latest cryptocurrency news. Let's continue where we left off. So what we've got here is Polygon witnessed similar success to Ethereum last year for onboarding users. So what I was saying was what we could really be doing with now, and something that we will be doing on a future stream, is we'll take a look at what happened to Ethereum when Ethereum really excelled, what the charts we're looking at, like when we're looking at its amount of volumes, when we're looking at the amount of users it has, the transaction rate. When we're looking at all of these things, we can kind of project and see what happened with Ethereum to what's happening with some other alternatives now. In fact, it would be really useful as well to see what happened with Solana last bull market, because Solana was a hidden gem at the start of last bull market. It's now a top 10 cryptocurrency. It performed incredibly well in the last bull market. So if you can find some lower cap altcoins that are trying to solve the same problem and be a decentralized application platform, and they have similar kind of technical aspects to similar usage to Solana last bull market, it could have a huge amount of potential. So these are the kind of trends that we need to be looking at this point in cycle, I think. As you all know, I'm huge on Bitcoin, a huge advocate for Bitcoin during this bear market. I am now looking to diversify, so I'm interested in looking at these kinds of things at this point in the cycle. Let's take a look at what else is going on in the markets here. So altcoins follow Bitcoin's lead after a tough week. So looking across the top 100, the pattern is repeated. We are seeing here two examples. So let's start from the top. As Bitcoin seeks to end the week with a recovery rally, altcoins are following as many look to erase recent losses. Looking through the market, there is a similar pattern to most altcoins. They have been down over the last 7 days, but demonstrated strength today, which was on Friday. We've seen Injective up 4.27%. We saw Ordinals up 10%. TAO down slightly, 2.4%, but up 36% in the week. You can see, if we just go down Crypto Saving Experts channel now, you can see there's been some fluctuations, but overall, the markets are all looking pretty similar in the weekly changes. Bitcoin's up 3%. And if we take a look, in fact, I was looking this morning, we're done with the Bitcoin chart, so we can go off this one. Let's save this for tomorrow's stream. If we go to link BTC, it's kind of been new. If you go on the daily chart, like for the 4-hour chart, the last couple of days it's been kind of neutral. Bitcoin's recovered and Chainlink's kind of recovered at the same rate. If we take a look at some others, let's take a look at what else has been happening here. So Polkadot Bitcoin, you can see this has been Polkadot massively outperformed Bitcoin on Sunday evening for a short period of time in that 4-hour cycle. What you can see here is the altcoins have kind of regained that balance and reclaimed some levels of support, just like Bitcoin has, and has kind of been following the lead. One thing I want to look at is Chainlink USDT value, because this in the previous kind of runs up in this year or the last 2 months has been slower to the mark compared to its competitors. If we take a look at Chainlink, this is up. Let's take a look at this from Monday last week. This is up 13%. Now, if we take a look at Chainlink, let's see if this is up the same. If we go from here to here, up 7.8%. So it's not seeing that volatility yet that Polkadot has seen. For example, let's take a look at another high cap coin. Let's take a look at Solana. If we pull this up, this has seen a nice gain here. We've got a 23% gain there. So Chainlink, again, in that top 20 section, has underperformed compared to the other altcoins right now. But what we have been seeing over the last couple of months is that Chainlink doesn't perform as well as the rest of them, and then when the rest of them cool off, it finishes its run. So maybe that's what's happening here. I would say that this isn't a point that I'm jumping into it because there's been a better opportunity, but I think it's interesting how it's late to the game again. But let's take a look at what else is going on in the markets here. When airdrop goes live on Solana, amasses $20 million volume in under 2 hours. Solana-based projects have been getting a huge amount of attention within the last couple of months. I don't think that's going to stop. I think there's a lot of excitement around there. They've got their new mobiles. I think a lot of people are interested in Solana and what's to come in this bull market. I do think this is down to the fact that Solana was a huge gainer for a lot of people in the previous bull market. Hopefully big things are to come here. I'm not a Solana holder. I'm not a huge Solana fan. We have seen some issues over the years with its downtime. We had FTX holding a huge amount of it. A lot of things have put me off over the years. So it gives me a slight bitter taste. It was an altcoin that I profited from last bull market, and I have missed out on that run to the upside at the end of last year. Maybe that's why I'm feeling a little bit bitter about it, but it doesn't pique my interest too much. Maybe the projects on the platform will, because there's a huge trend there and it's definitely something to be taking advantage of, but it's not something that I've been looking too closely at within the last couple of months. Maybe you should all change my mind on that in the live chat, but I think that's all we've got for today's stream. We've already killed one battery, we don't want to kill two. Thank you very much for tuning in. As always, I hope you have enjoyed. Please don't forget to tune back in tomorrow at 11 a.m. UK time, but that's all for today. Thank you very much for watching.